What's up guys, it's Coffee with Teresa, and in this video I wanted to talk about some of the trades I'm looking to make for this week, as well as some of the trades I've already been in. So watch this video if you want some trade ideas. Now, if you guys find this video helpful, consider dropping a like since it really helps out the channel and more people will see it. Now, if you guys like this video, I'd appreciate it if you drop a like or share it with a friend so that more people can see this video and it'll help out the channel. It's April 6th. I'm currently in Spain visiting some family and friends. I actually came here for a wedding, but it got canceled because of COVID, unfortunately. And the restrictions here are, I've got to say, a lot different than the United States. They're pretty strict here. There's a curfew at 10 p.m. You have to wear a mask everywhere, including the beach, even if you're spaced out. So it really does make you appreciate the freedoms that we have in the United States. Even if you don't agree how we've handled the virus 100%, I really do appreciate the freedoms we have there. And trips like these make you realize it more. I also come to Spain a lot. I go like every year, twice a year, and this is the first time that it's really thrown me off. I'm like culture shocked with how people think about handling the virus and just how restrictive government is. So I'm going to start out by talking about 3 trades that I have gotten into. The first is Walmart. Now, I was in it last week, but my entry wasn't the best. I got in around 136.60 on Tuesday or Wednesday, and as you can see, that was around the highs. And I bought calls last week for this week. So the problem with this trade was that 136.60 was the point at which for me, it was like confirmed bullish. And that's where I told myself I'd go long. And that's sometimes the problem when you wait for confirmation. When you wait for a confirmation signal, it probably wasn't a strong enough signal. And it seemed like it would have moved higher to me, but it reversed. And then I was bleeding for a day or two, but I also noticed that Costco and Target had made major moves and that Walmart was kind of the laggard of the group. And even though it moved down, it wasn't necessarily bearish either. So it just seemed like it was consolidating. I stayed in the trade, and since it was a small position, that was why I decided to keep it. And yesterday it made this breakout move up. So I think it still has room to run, especially considering this gap here. It's a really big gap. And my next targets are 142.50 and 143.48. If you're looking to enter a trade into Walmart, I'll explain what you can do when the market opens to determine the direction that it's going to take and how to decide a good entry. I'll do this later in the video. Now, the next one I want to talk about is GM. So I noticed they were talking about it on CNBC early pre-market yesterday. So I bought the April 16th $60 calls, and I'm still in this trade. I also think it has more room to run, and my next price target is 62.24. After that, I'll consider rolling my option to a higher strike price, and I do this because it eliminates my risk, because I can sell my $60 strike option, and if I rolled up, for example, to 63, it's less money. So I sell my 60s, I get into the 63s, and I have less risk on the table, and I'm still exposed to upside. But I do want to see how the candles close around 62.24. I got into NIO yesterday and it broke down. This is the next one I want to talk about. And in retrospect, I should have gotten out right as it broke this line, which was the low of the first 15 minutes of the market open yesterday. But I had hoped that it was going to start going higher because on the daily time frame, it started curling, as you can see here. So NIO is definitely still on my watch list, but I'm going to wait right now. Also notice this level of 39.15. That's a solid support. But again, I'm going to wait for confirmation after the first 15 minutes of the market for it to take a direction. It might start consolidating. So I just want strong candles and high volume for me to get into that play. And for those of you that don't know, waiting the first 15 minutes of the market open can save you on a lot of mistakes. Normally the first 15 minutes are the most volatile. So what I do when determining whether or not to exit an option position for very short-term trades is I'll mark out the high and the low of the previous day just as a reference. And then within the first 15 minutes of the market, I'll also mark out that range. Like here, for example, I'll mark out this high and this low. And once it looks like there's a clear direction, I'll enter a trade on any pullback. If it starts breaking above the top of the 15-minute high, for example, that would be a bullish direction. So I would go long. This is what I did in GM. And then of course, you want to set stop losses just in case there is a reversal at some point throughout the day. And the idea here is that if you're in the right direction and it's grinding higher, you'll also start to change your stop loss to lock in profits. So if you enter a trade here, your stop loss may be set just under that 15-minute high, and as it pushes higher, you want to raise your stop loss. The next one would probably be the nearest pullback, and then the next pullback once it's grinded higher after that. And that's how you're able to lock in profits and keep proper risk management in check, especially when markets start becoming more volatile. Moving forward, I wanted to talk about some other stocks that I have on my watch list. The first one is Dollar General. Now, it was consolidating for a bit yesterday, and it made a huge move to the upside and broke past this resistance of 204.03. Now, this could have just been a dividend play since dividends were issued yesterday. It may have a pullback, but it's sitting around that 207.75 level, which was the next target. And the next price targets higher for me are 212.50 and 216.11. So I'm just going to keep an eye on that. I have it on my watch list, but I'm not in the trade yet. If I do decide to enter a trade again, it's going to be after the first 15 minutes of the market when I see that there's a clear direction. And I'll probably get into options for the following week. So that's extremely short term. So these trading ideas I'm giving are just to ride the momentum that may be in the stock. And that's why it's important to keep a stop loss as well. But also for me, given the uncertainty the markets have had and as of late, how they've been acting, I'm trying to keep all of my options trades short term. All I'm doing here is I'm just looking to ride the momentum. And with the stop loss, if I make a mistake, if I see that options are losing up to like 30% of its value, I'm out of the trade. That's like a general rule that I have for stop loss. The next one I want to show you guys is Qualcomm. So it had a big drop down and then it was consolidating for most of March. And the last 2 trading days have been big moves higher. Look at how it's broken out of this range that it's been in. So for me, anything above this 50-day moving average, I would go long in. And if I see that it starts getting rejected here, I would probably buy some puts. So my targets to the upside are 142.30, 144, and to the 100-day moving average at around 145.70. Now, if it were to start looking bearish, my targets to the downside for this particular trade would be 137, 135.75, and 133.70. So let me know if you want me to make a more detailed video about this, about options, or about unusual options activity. If you have questions about any of the stocks that we went over for this week, drop it in the comments and I'll try to answer it. And if you found this helpful, hit the like button so it can reach more people. Thanks for watching, guys. See you soon.